Hello guys, good evening. This is LTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as we know, past profit do not guarantee future results. The forex market is volatile as you take your trades. Apply this management. All right, today is 30th of November 2025. This is 11 p.m. GMT plus one. All right, so this is your weekly market review and against the 1st of December 2025, right? And it says with US agencies team managing releases scheduled following the government shutdown. Investors await delay official publication and fresh private surveys. Say the BA will unveil the September income and outlays aggregate, which includes PCE price indices, while import and export prices by the BLS and industrial production compiled by the feds will unveil fresh insight on the impact of tariff, right? So key leading indicators will also be featured. Headlines by ISM manufacturing PMIs and preliminary Michigan Consumers Confidence Indices, while reports by the ADP and Challenger will update and will update and will update will update and cautious labor backdrop, right? So PMI are also keenly awaited in China and Canada, right? While Australia and Brazil will post their third quarter GDP and the Eurozone will unveil November inflation rate, right? Lastly, Reserve Bank of India will decide on India interest rate, right? So let's look at the economic activities for the week. All right, so let's just take a look what we have for the week, right? So let's see. So tomorrow will be Monday, will be the 1st of December. So we have only US news, Chicago PMI. I think we also have Bank of Japan chairman's news, right? By 2 p.m. GMT plus one, right? Yeah, and that's going to be a high part news also, but I'm not seeing it yet. I saw it in Forest Factory, right? So we have S&P Global Manufacturing PMI, right? Yeah, so the PMIs are the manufacturing sector of the economy that to do with, the economic to GDP, right? And we have ISM manufacturing PMI, right? So the readings are mainly above 50, and when the readings are above 50, it means the economy is expanding. And when the readings are below 50, means the economy is contracting, right? So if we have readings above 50 means the economy is doing well, and really below 50, the economy is contracting, right? Then on Tuesday, we have Fed chair Powell speech, right? And for Euro, we have, sorry. And for Euro, we have CPI year on year, right? Then that's same Wednesday we have job listing, job openings, right? Yeah, on Wednesday we have ADP non-farm employment change, S&P global services. First of all, this one for Monday is manufacturing. Why here is service, right? So it's either service or manufacturing, right? Then we have ISM non-manufacturing, right? ISM non-manufacturing price, right? Then on Thursday, we have jobless claim. On Friday, no NFP this week. NFP will next week, non-vampire, right? Yeah, so that is what we have. The hyper news or let moving market for the week, right? Yeah, so let's head back to fundamental analysis and see the reason why the biases of the marketplace they follow, right? So for me, the dollar will be bearish. And what are the reasons, right? Yeah, dollar will be bearish because one, rate cut expectations jumped to 79. But let's take a look at the new update, right? So rate cut expectation has jumped to 87. That means the Fed is expected to cut rate on the 10th of this month, right? Yeah, on the 10th of this month, right? So they're expected to cut rate on the 10th of this month. So rate cut means they are devaluing the United States dollar, which will make the dollar to fall, right? That is the implication of this, right? Yeah, and no change is 12%. So that means they're already pricing for rate cut for the percentage was 87% against what I have here. That was why I did the analysis. Was 70%, right? Market are now leaning heavily towards a Fed rate cut. That alone is a softening dollar. So if you look at the from fundamental basis, why it is so, say traders crowd into Fed futures targeting a decent rate cut, right? So you can see investors are betting that the Federal Reserve will cut interest rates again when policymakers meet next month, that is this December, this next December, right? With market prices significantly roughly 80% certainty of quarter point, right? Quarter point move. That is right by 25 basis points, right? Yeah. So shift in rate sentiment started last week. That means they started pricing in for rate cut last week, delayed September job and data, and was reinforced by commitment from New York Fed President John Williams and San Francisco Fed President Mary Daly, right? So the Federal Reserve Chair Powell and his allies are on board with what a cut, despite the pushback from other officials who are more concerned about inflation, according to what Subhadra uh, uh, Rajapal, the strategy of that. So we can see the pricing for rate cut already. That's what we're seeing it like that, right? So also looking at here, you see that Treasury futures rally, right? Dollar falls on gloomy US job picture. So the US job data has really reduced, but though this was on the 11th, right? So though all these are the build up, right? It's not just one day news, right? They're all built up right towards all this, right? Yeah, so let's go back and see. Now, see labor market cooling, right? So hiring has slowed, unemployment trending higher, right? So the first own beach book shows weaker consumer spending. So the consumer spending has reduced because people are no longer employing, and so the rate at which people are spending money has reduced. And when that happens, it means the dollar is being weakened, right? So tariff reduction by Trump administration reduce inflation pressure, also increase Fed's room to ease what the interest rate. Right? So 2-year yield spread versus Europe are narrowed, right? So reducing US appeal. So government shutdown drag slightly weigh on fourth quarter GDP. So this analysis, you can see that the market are pricing in for rate cut again, and that is directly bearish for the dollar, right? So no more hawkish catalyst, right? So I think that the dollar is going to be bearish, right? So you can see the reason why the dollar is going to be bearish, right? Yeah, so it has increased to it's 87.4. So that means the dollar is going to be bearish, right? So let's just head into the chart and see what we have. So for me, let's look for a break of yeah. So for me, so price was here, right? Yeah, so that's been here. So if you follow this, right? So I want to look at so this place. Let me go to H4. I see good analysis. Yeah. So for me, this is what I marked for already. So I'm going to start selling the dollar whenever price gets here. That means I'm going to be bearish on the United States dollar, right? Now before that, let me talk about market sentiment, right? So we're looking at the VIX, right, volatility index. So, as we all know, whenever volatility index scales above 20, it means there's risk of, right, market sentiment. But on a scale below 20, it means there is no risk of, we're on risk on, right? That means this risk on means there is no tension in the geopolitics, right? In the United States economy, right? There's no tension that will likely lead to fear or panic or whatsoever. So risk on means currencies like Aussie, Kiwi, CAD can really do well, right? Yeah, so that's just it, right? Yeah, and also looking at the S&P 500 stock market, you can see that the stock market is rallying, and the stock market has caught up to where it was last time, right? Yeah, so stock market has already caught up to where it was last time. So whenever the stock market is rallying, it tells you that the bond market should have an issue, right? So I'm not going to do this. So those who trade technical analysis, they will likely push price. Okay, this is a wedge, right? Yeah, but no, that's not it, right? So the stock market can break above this level because they are cutting rate. So rate cut equals a rally in the stock market, right? So investors are already pricing for rate cut. That's why we saw for last week, right? Primary price was just started coming down because if you look at it, they said the pricing for rate cut is last week. So this was like a retracement. So I seen price coming all the way to the downside, right? So let's continue. Then I think I should head straight to gold, right? Yeah, straight to gold. So for me, if dollar is bearish, gold should be bullish. So what are the reasons why we are going to experience a bullish run? Number one, the Fed rate cut expectations backs is not 84, right? Has reduced real yield, right? Bullish for gold, right? So US dollar softens, gold strength. So they are inversely correlated. It means whenever the dollar is going up, the gold should come down. Whenever the gold is strengthening, dollar should go down, right? The only time both of them goes in the same direction is when we have a reduced risk of market sentiment, right? There is geopolitical tension, global crisis, and all of that. So they act as safe haven currency and a safe haven commodity, right? Then global geopolitical risk rising, right? So this also is pushing the gold to act as a safe haven, right? Between US China tension, then Japan and China friction. So Bank of England, European Central Bank not hiking, so they are holding. So in terms of interest rate differentials, right? The United States is cutting, while Bank of England and European Central Bank they are holding, right? Which will make the GBP and euro to likely be bullish, right? Global easing cycle what approaching, so which means a supportive for metal, right? So gold tries on low rate, high uncertainty environment, right? So gold is bullish, right? So what am I looking at for gold? Let me go to H4. Let me go to H4, right? Okay, let me go back to candlesticks. Think I don't need that anymore. All right, so this was the analysis for last week, right? So break and retest, right? So depending on what we wake up from the markets, let me see M45 time frame if we can get. All right, good. All right, so if price comes here again, yeah, because I'm seeing price will likely come here, right? And that means price coming down mean we should expect a move to the upside for dollar, right? Yeah, that means dollar coming here and we should likely make gold to come down a little bit before going up, right? Yeah, that's 1 hour time frame. That was the time frame I used. Okay, good. All right, so I'm expecting dollar to come here, then we can gold, right? Then we can think of buying up gold, right? Yep. Yep. So that is my analysis for gold. So I'm bullish on gold. So let's wait for this retracement to be complete. Then we can easily buy gold, right? So let's head over to the yen, right? The Japanese yen, right? So Japanese yen, first of all, let me talk about the intervention, but let's talk about the yen first. In there, we'll talk about intervention and all of that, right? So for the yen will be bullish and yen bullish. Why, right? Back with Japan rate high, probability jumps to 55 to 60%, right? So, when Takeshi came in, right? Senior Takeshi came in. She is a bond person. She's not, no, she's a stock market person, not a bond person, right? Yeah, but as inflation keep going up, right? So there's a need for rate hike, right? So you can see that probability of Japanese rate hike has jumped to 60%, right? Yeah, so they are likely go to a hike rate, right? But I think that should be next year, right? So the more the percentage jumps higher, the more the positivity that will likely hike rate, which will likely strengthen the Japanese yen against which likely strengthen the bond market, right? Then apart from that, Japanese yield rising narrows the huge gap with the US, right? Now, you can see the yen's intervention risk is back around 155, 156 to 158, right? Yeah, I think last week when I did the analysis, I said I'm looking at if we can get up to 160, that is where if the yen can rally up to this, if the UN JPY can rally up to this place, that means right, the intervention will likely take place. So what is intervention? Intervention is simply means when a particular currency has traded low, right? It will get to a point when the central bank will likely buy back the currency with the dollar reserve that they have, right? So that is what intervention. So by doing that, it will boost the strength of the currency on its own, right? So we're looking at the JPY index, right? Yeah. So if the intervention happens, this is what we'll likely see, right? The yen will the rally all the way to this place, which will likely it rally to a 400 to 500 pips at a go, right? It might do the spike twice or once, but the target is normally 500 pips, 400, 500 pips. When once that happens, that means GBP JPY is going to sell, uh CAD JPY going to sell, NZ JPY going to sell, AUD JPY going to sell, Euro JPY is going to sell, CHF JPY they are all going to sell, right? And immediately it does 4,500 pips, then you can start buying USD JPY, GBP JPY, CAD JPY, Aussie JPY, Kiwi JPY, Euro JPY, CHF JPY, right? So let's just wait for intervention. I've been waiting for intervention since on Thursday, but it didn't happen. But so let us wait. I think today by 2 p.m. the central bank, the president of the Bank of Japan will likely make an announcement, right? So maybe it might happen then, or let's see this week, or let's see how it's going to be. But they are close to intervention, right? So for me, my eyes are still waiting for the intervention. So I've tried intervention twice, right? So I know what it is, right? It's a very good time to trade, but you have to target it 400 to 500 pips, like I said, right? Yeah. So like what we have is saying, intervention is going to be 156 to 158, right? So prices last week price was at 158, right? And now it came to 156, right? Yeah, so yen is going to be positive. So US, China, Japan, geopolitical pressure raises volatility, but ultimately strengthens Japan resolve to tighten, right? Yeah, it strengthens them, try to tighten so that they can hike rate, right? Yeah, so that's just it. But US JPY is going to be facing downward pressure when intervention is going to happen, right? Yeah, so it's going to sell first before it will likely buy, but it's going to face downward pressure, right? So bullish for this, but bearish for this, right? Yeah, USD probably because the dollar is weak, right? So again, the yen is going to be more weak, right? Yeah, so like I've said, for GBP and Euro, they're all going to be bullish mainly because of the dollar weakness, right? So UK data soft, right? But Bank of England is close to cutting after December, not this week. So we're looking at rate cut from next year, right? Yeah, like we're looking at rate cut from next year. Maybe December, okay, December cut is sorry. By December, right? So this is November. Sorry, I was looking at next year. I thought we were already in December, right? But by December, they would likely call trade, right? Yeah, but for now, they're not doing that, right? So market expect easy, but not immediately. So autumn breeze boosts confidence and guilt, right? And jilt, right? So we saw last week, I think earlier this week, there was autumn boost, and I think GBP was somehow strengthened to an extent, right? Yeah, so US weekend gives GBP a lift, right? So like I said, they are negatively correlated, right? They're inversely correlated. That means a strength in dollar will likely weaken the GBP, and a strength in the British pound will likely weaken the dollar, right? So sterling already formed an important low, right? So if you look at the GBP index, it's not here, right? It has formed important low, so we're expecting a potential rally from that, right? They're looking at euro. Is it going to be the same, right? Well, I'm expecting a bullish euro, right? I'm expecting a bullish euro for this, right? It says Fed easing expectation weakens the USD, right? Giving euro room to rebound, right? Then it said ECB is seen as finished cutting. So the rates differentials advantage for USD is what is shrinking, right? So European data still weak, but no immediate ECB easing, right? So everything is stable, but dollar weakness is the main drive, right? So we saw that dollar weakness because of the easing or rate cut has really made the dollar weak against major pairs, right? Then for USD card, right? Yeah, card. For card, might bullish for Bank of Canada is on pause. Right now, one is on pause. Why for the dollar they're going to be easing. So pause is better than that of easing, right? Yeah, so that is why That means that they are not cutting rate, they're not hiking, so they're on hold. That's what it means. Why are the dollar they're planning to cut rate on the 10th of this next month, right? So Fed expected to cut narrowly US advantage. So fiscal expansion in Canada improves sentiment. Canada has been weak this year, right? So risk adjusted flow may what rotate back in because of the dollar weakness, right? Right. So for this, Aussie is going to be bearish, right? So I might not be interested in this, but it's a short-term CPI rise, inflation is rising, but RBA is firm on hold. So one is holding, while the other one is hiking. So this is supposed to be bullish anyway. But let's see, commodity correlation strengthens, but global risk sentiment is soft. Okay, that's true because of global risk sentiment, right? Yeah. So but in the US, there's still a risk control. It's supposed to be bullish, but on the same day, they're talking about global risk sentiment, right? So Aussie just made 3 months low. So recovery attempt keeps failing at 200 EMA. So it's just like it's rallying, it's still ranging at 200 EMA, right? So you put EMA on the chart, you see that Aussie is still the way it is, right? Yeah. So what I've said so far is it, right? So what I've said so far, I'm going to be bearish on the dollar, right? Yeah, because of the rate cuts and it's 4%, it's 7% probability that they're going to cut trade, which will likely devalue the dollar, right? Yeah, and Banks has shown that we are on risk on and study. Stock market is rallying, right? So the dollar is about to fall, right? So JPY index for Japanese yen, we're expecting intervention and probability of rate hike has increased to 55 to 60%, right? Which will strengthen the yen, right? So the yen is bullish. So and we're also looking at the intervention. That's why I'll be very careful on intervention. So I'll urge each and every one of us to be careful with the intervention, right? Yeah, we should intervention. So let me show us one of the why gold is bullish, right? It's a gold waivers as traders assesses Fed rate outlook or geopolitics, right? So gold closed little change as prospect for Fed rate cuts counted is easing geopolitical risk, right? A potential peace deal may reduce the geopolitical risk premium and trigger some profit taking, right? According to Ole Hansen. Right? So gold has gained about 5% this year and is on a track for a best annual performance since 1979. Wow, that's good. Supported by elevated central bank purchases and inflow to exchanges, right? So for me, I'm going to be bullish on gold. So let's see USJPY. So for me, for USJPY, I'm going to wait on intervention, right? Yeah, I'm going to wait on intervention, but right currently, um yen is stronger, right? Yen is doing stronger. So I'm spending a bullish yen, right? I'm spending a bullish yen. A bullish yen means USJ should be bearish, right? Bullish yen means USJ should be bearish, right? So I'm going to target it. Whenever USJPY comes here, I'm going for a sell, right? Yeah, I'm going for a sell USJPY. Why for GBP USD? Let's see, right? For GBP USD, yeah. So I'm still going to look for a buy. Yeah, because the dollar is weak, right? So they're already pricing for rate cut already, right? So the since they're pricing, for rate cut too. So we are expecting. So I'm seeing price to get here before we let it buy, right? Yes. Why for Euro USD? I think we have the same scenario, right? Price comes here, then I buy to take price to the upside, right? But for USD card, bearish. So here I'm going to target here as well, right? USD card is where I'm going to target. Sorry, that's not bullish one. Target here for USD card. All right. Okay. For Aussie, I'm not interested in Aussie. I don't know. I'm not interested for Kiwi. Gonna be the same for USCHF, USCHF, right? So I'm still looking at here, right? The price coming here. All right, here then will likely sell, right? Yeah, the price coming here likely sell, but the price does come here, that's going to be a good one, right? Because of this, because of this, um, impulse move, right? Yeah. So let's see what price does, right? Using this place as levels, okay? So price come here, good. For GP JPY, yen is strong, okay? Yen is strong. So yen is strong. So this will be good, right? Yen is strong, so this will be good. Okay. Yeah, so this was my analysis I posted on my private group last week Friday, right? Yeah, so this is it, okay? Right for this. They're going to drop, but let's wait. For me, I'm going to wait for the intervention before I'm going to trade the yen pairs, right? Yeah, so that's it for me this week. So for me this week, I'm going to sell dollar, buy the gold, sell USD JPY. That means I'm bearish on USD bullish on GBP bullish on Euro USD, bearish on USD card, bullish on this, bullish on Aussie, and bullish on Kiwi. While USD CHF bearish, right? For the yen pairs, I'm waiting for intervention. I will not risk it. It's deadly, right? When it happens, we know how to strike it, right? So that is for me this week. If you have not subscribed to my channel, kindly subscribe, comment, and ask your questions in the comment section, right? Yeah, and if you're interested in my mentorship fundamentals, you can reach me right here. I'm available on Telegram, right? Are you on Telegram? Come to my channel, reach me on Telegram, then we can talk, right? All right, thank you and have a lovely week ahead.